Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the S&P 500 futures chart. I would just like to start today's video by saying that I hope you all had a wonderful Easter weekend. Of course, this is a shortened trading week because yesterday the markets across Europe were closed. However, in the US, they did remain open. But let's just have a look at what happened during yesterday's trading session here for the S&P 500. We actually had a rather flattish day. At one point, we were trading down around 1%, but later on in the trading session, we did actually manage to pare those losses. And as I just mentioned, we ended pretty much flat for the trading session up at around 4,100. So it's quite encouraging to see that we were able to pare those losses. And going into today's trading session, we're seeing Asian stocks and Asian markets and now European markets that they've just opened, they're all up across the board, and we're seeing the S&P 500 now trading at around 4,118. This week's going to be very important. Reason being is because we have lots of economic data that's due. Starting as early as tomorrow, on Wednesday, we have the CPI reading. That's obviously going to give us a picture as to what inflation is doing, and of course the Fed keeps a very close eye on this economic data. And then followed by the CPI reading, we have the PPI inflation report on Thursday as well. So again, another inflation reading. And then, in my own humble opinion, on Friday we have probably the most important economic data, and that is the retail sales. It's going to give us a real indication as to what the consumer is doing. Is the consumer spending starting to weaken? And it's going to be very important to see on Friday what the retail sales figure is, because that's going to really give us a clearer picture of the earnings, the corporate earnings that we're going to see over the next couple of quarters. Of course, as of recent, shortly after we had that banking crisis with the Silicon Valley Bank going under, etc., we have had some fresh recession fears. And that, of course, is going to, dampen the consumer sentiment with regards to spending money. It's a very disinflationary event that occurred with Silicon Valley Bank going under. Lots of people were scrambling for their cash, etc. And, I would not be surprised if we did see the retail sales come in slightly weaker than expected. And it's very clear by looking at the stock market's broader performance last year, we were down double-digit percentage points. That to some extent the market has already priced in the fact that earnings are probably going to be coming down at some point. We've seen a record pace of interest rate hikes by the Fed, and at some point this year that is going to take an effect on the consumer. So to some extent we have priced in a slowing down in corporate earnings, but the big question is, have we priced it in enough? If we have the retail sales figure coming on Friday, which is going to be significantly lower than what's expected at this moment in time, then we could really start to see this market deteriorate towards the downside. But if we get a number that comes in slightly lower or in line or even higher than expected, you're likely to see the market probably trade towards the upside. So it's going to be all eyes on the Friday CPI reading. What is the consumer doing? Is it starting to weaken? Is it still strong? Because up until now the consumer's been hanging in there. But yeah, it's going to be a very, very important week this week. And I feel like the Fed is going to be keeping a very close eye because, of course, their interest rate decision is coming up fast, right? We're already nearly halfway through the month of April, and we hear from the FOMC, from the Fed, at the beginning of May, where we're expected to get that 0.25 basis point hike. So lots of economic data to keep us busy this week, lots of volatility expected. But from a technical perspective, we are looking like we're trying to break out of this wedge here in the S&P 500. If we continue this move high, I think we go to 4,200. And the big question is, do we break above 4,200? If we break above 4,200, we likely then go to the August swing highs all the way up at around 4,300. If we were to break down from here, of course, there's plenty of support down at 4,030. We have the 50 and the 200-day EMA, which have just formed that bullish crossover just below at 0.236 fib area at around that 4,030 area. So there's plenty of support below us. But from a technical perspective, things are starting to look quite bullish here for the S&P 500. So it's going to be very interesting trading this market going into this week with lots of volatile news events occurring throughout the week. Before I end today's video, if any of you would like to receive my trading signals and be part of my trading group over on Telegram, then please do not hesitate to scan this QR code on your screen. This will take you through to my website, where I charge a very small fee of $29 to join my signal group. So if you're interested, please go ahead and give that QR code a scan.